Welcome everyone. My name is Kamal Manocha. I represent PMSAIF World. Today we have a very interesting and very well-known investor, I would say, not a fund manager. We call, all thought leaders as fund managers. But Madhubhai, with your, permission, I'll want to call you as one of the investors because I see, you as one of the very well-known and most prominent investors and students of capital markets who has learned as well as has been learning with open mind. Many people call themselves as fund managers because they have fixed thoughts and fixed opinions about investing in a particular style, particular category, do's and do not do lists. But I see you as one investor who's absolutely open minded and who has made money in PSUs, made money in commodity stocks, made money in small caps, mid caps, large caps, compounding businesses, quality businesses, every types of businesses, and you have absolutely tried to identify right business at right time, and absolutely that has made you a thought leader. And to all of you, welcome to this webinar. And absolutely, the gentleman that we have today needs really no introduction. But for the sake of introducing, Mr. Madhusudan Kela today to all of you, he brings with him 3 decades of experience. He has worked with erstwhile Reliance Asset Management for almost 17 years. Was very well known for first 2 decades of his experience for listed space, and then for last almost, I would say, 10 years, for 1 decade, he is also very well known in the unlisted space. Absolutely, he has experience across the board. And hence today, with him, we'll spend 1 hour to understand his learnings, his wisdom, and especially for the objective of happy and successful investment experience for our audience, for our clients. Welcome, Madhubhai, to this webinar.
Thank you, Kamal. Thank you for having me. I really appreciate having me, and I hope we can add some value with our experience to people who are investing 1 hour with us today.
Sure. Absolutely. We'll do a very sincere endeavor. And thank you for joining.
Thank you so much, Kamal. Really appreciate it.
So, Madhubhai, my first, thought that come to my mind, today morning is that over last 6-8 months, and especially I would say even before that, we have been seeing a lot of frenzy going in the space of small caps, mid caps, and the listed space. They're at all-time high, and mid caps and small caps work in cycles. At the same time, there are kind of many quality stocks which had actually done very well over last 10 years, which are like, Bajaj Finance, Asian Paints, Nestle, Titan, HDFC Bank. These stocks have actually relatively underperformed. And these stocks are, testing patience. And I think if we talk about large clients, large investors, family offices, or ultra HNIs, they have large allocations to these large cap stocks. And what is happening because of the too much test of patience, many of these investors are kind of thinking or trying to take a decision of slowly moving from some of these quality names to some of these names where there is a lot of frenzy today. And there is a narrative, which is supporting this change, that 10 years ago there was a era of very low interest rates, zero interest rates, and hence markets were not at all value conscious. And that is why there was too much money coming in and large caps were becoming more and more expensive, and hence the PEs of 70, 80, 90, 100 were acceptable. But now the decade ahead of us, we'll see maybe, not low interest rates. Interest rates are already kind of high. In international markets, in US, they're already at close to all-time highs. So given this change, which is a real macro change, there is going to be a change, from quality to value consciousness. And there is a more value available in the broader space of mid and small caps. So this is, one, I would say, big area of confusion, which is there in investors' mind. So I would want you to address this part foremost as we, continue our discussion.
Sure. So Kamal, good morning again, and hello everyone. So Kamal, I refer to the preliminary introduction part which you gave very kindly. The one thing which I learned over the years, for me, the only rule in the market is that there are no rules, right? And this was being taught to be my mentor, Rakesh Jhunjhunwala, who I looked up to a lot. And we have had hours and days of discussion on this subject that, when the opportunity is so wide, why be biased about anything? You should only be absolutely open-minded in markets and also in life. We don't know what changes, how it changes, etc. And I have seen a lot of my friends who are, kind of fixated. Okay, this is what they will do. Obviously, they have also missed out, and there are people like us also who have been open-minded. We have also missed out, and we have also committed some mistakes in the process by absolutely being open-minded. But I think overall it has worked. So to your question, Kamal, the market goes through cycles, right? It is just that investors have tendency to extrapolate the last cycle. Like, so there was a tremendous amount of money being made in PSUs between 2003 and 2008-9, right? If you remember that cycle. And there was a 10-year lull period between 2010 and 2020 in the PSU stock, right? Similarly, there was a tremendous amount of infrastructure boom and real estate boom which came in between 2003 and 2008 in the real world as well as in the markets. And again, if you see, those stocks went in for a huge correction between 2010 and 2020. Right? A lot of those stocks fell by 70, 80, 90%. I don't think anything is immune from that perspective if we talk about market, including some of these quality companies. So if you see what happened in the name of quality, you buy anything which is quality at any price. Investors made money between 2010 and 2020. A lot of these companies got significantly re-rated, right? And in that re-rating, of course, there is always over-ownership which happens, and that's how the market cycle actually develops, right? And so if you look at, as you rightly pointed out, everyone who actually went on the other extreme and fell in love with all of these quality names. In fact, I've been very vocal since 2020, since the beginning of this bull run from the time of COVID, that this is not the time to buy some of these most expensive companies at 70, 80, 90 PE multiple, but this is the time to look at other basket which has been very neglected, where we can see earning growth, where we can see under ownership, where we can see a delta coming through. And I think slowly and gradually the markets are realizing it, and we are seeing that delta shifting here. So it's a cycle, Kamal. It's nothing to do with purely, trust me, fundamentals or technicals and this, that. It's just cycle, and I've been around for more than 30 years. I have seen so many of these cycles, right? Technology boom came in between 1998 and 2002. Infosys were darling of the market. Wipro were darling of the market at that point of time. But later on, for 10 years, these stocks didn't make any return. Even they were great companies. It qualified in every parameter of investable: size of the opportunity, great management, business looking very good, ROE, ROC, everything was very, very, very good. It's just that there was over ownership and there was valuation, which was not in our favor. So I think something like this has played out in some of these quality stocks, wherein people, there is tremendous amount of over ownership and there is valuation. And of course, when you are trading at 70, 80 P multiple, if you are growing at 30, 35% or 25% above, then multiple can also be justified. Now, some of these companies are growing at 10, 12, 15%. Then how will you sustain 80, 90 P multiple? I think we are at the I would not say absolute beginning of this cycle. So some amount of adjustment has happened, but I am quite sure a lot more will happen in due course of time. Kamal, what happens with my experience, in the quality name, there is only time correction. So you don't end up losing a lot of money in a lot of these quality names, but you miss out the opportunity and you miss out a lot of time. So a lot of my peer friends who claim that they are really long-term investor. I am also a long-term investor, but I can't remain in the market without making any money for 3-5 years. I can't emotionally reconcile with that kind of a situation. And there is nothing wrong or right about any approach, right? It's just that you have to be emotionally comfortable with your own style. So you should not get frustrated. So because I would get frustrated if I didn't make money, in irrespective of any quality name, I have my own style, and which is why I'm much more flexible and much more willing to learn, much more willing to adapt. So I just summarize your question by saying, in a lot of these companies, you are really proud to own them or proud to own them, but you are not happy to own them. Your portfolio looks great, but the returns are not there.
Right, Madhubhai. Another, narrative which I have heard you also kind of saying that if you find a good company, marry it. Now, is the core subsequent thought that comes to mind is there really a formula to find such a good company? Because marriage is for lifetime, and you are saying that market works in cycles.
So yes, to some extent it is little contrary. But Kamal, the companies which you really find, when I say marry them, you have to marry them at the age of 21. There is no point marrying a woman at the age of 70 years, right? So that is the context. So at what part of the cycle do you find these quality companies? And when do you marry them? That is important. Then only the marriage will last. But if they become very old and at that time you marry them, then it will not last. It will not be fun. So I am saying if you identify a real good quality company at an absolute absurd price, and that time then if you're trying to trade it for 100%, 200% return, then you will miss out.
Oh.
And I would like to put a context. When I say marry them, of course, not like marriage. If we are only talking in the contextual form. So one has to be always open. Even if I bought really a great company at a really, really good price, but let's say if that company grows 100x, 200x, and valuations become really absurd even after 10, 15, 20 years. And if I don't see that level of compounding, then I'm open to sell these companies. See the difference, Kamal, is, we all read a lot of books, including Warren Buffett. See, the problem is that, Warren Buffett, while it is really very easy to read those things and it is theoretically very convincing, there are two problems. One, Warren Buffett has to manage more than $100 billion. You and I don't have that compulsion. So we need not, mindlessly copy what he is saying. We have to put that in our context. That is one. Second, we have to also understand what is his emotional strength to go through a opportunity loss. What is his understanding of last 70 years, how he spent time in the market. So you can't copy someone half-heartedly. And that result will never be good. So I am saying that, markets are all about, you need to get indications from everywhere. You can't draw conclusions from anywhere. Conclusion is the real right of a great investor. You have to conclude it for yourself, right? If you copy someone, if you get concluded based on someone else's principle, I don't think it's a really good idea. It did not work for me.
Right, Madhubhai. So, what is market conveying today in the current context in terms of their all-time high levels? Valuations, of Nifty are not, unattractive. They're definitely somewhere at average, but mid and small caps are at all-time high. But at this juncture, are you fully invested, or what is your, I would say, take? What is the feel that you get from equity markets in terms of the kind of risk appetite that one should kind of open up for investing in equities?
So, Kamal, I'll give a very honest answer. See, the market is $3.75 trillion, right? I have to only find a few ideas for me to be fully invested. So, majority of the time I am fully invested because I am able to find these ideas in any market, right? There is a larger theme and there are a smaller theme. So someone who has got to, let's say, put 30, 40, $50 billion, he has to worry about, tactically playing some cash, this, that. I also had created some cash in my portfolio, but I review that cash on an everyday basis. So let's say yesterday also I made some investment, 1 week back also I made some investment, 1 month back also I made some investment. 1 month back also I sold something. Yesterday I sold something. Maybe 1 week back also I sold something. So I think, my approach is very nimble. I am saying India is happening, right? It is not very difficult to find bottom up really good investment ideas if you have a perspective, if you have conviction of 3 to 5 years, right? So we are still able, so by and large, I would say certainly not, markets are not as cheap as they were when we began this bull run. A lot of the stocks and very good quality stocks and promising stocks have also gone up 3 times, 5 times, 10 times, 15 times. Some of them I'm fortunate to have, some of them even in my portfolio. So when I see them, obviously these stocks have traveled a long journey. So I am doing 3 things, Kamal. I am not selling in a hurry just because they have gone up 10 times. I am still seeing that if there is an opportunity, I may compound. So my expectation today is very realistic. I am not extrapolating the return which I made in the last 3 years, that I will make the similar return over the next 3 years. That's not my base case. My base case is God has been very kind. A lot of people think that we are smart. We are not smart. It is COVID which came in. It is because of COVID, markets became very attractive. We just responded to it. If we were smart, then we could have created COVID, right? We did not do that, right? So I don't think I would like to take, and I would urge a lot of investors also, that they should not take extraordinary credit for investments going right. The extraordinary credit goes to really the larger setup, the external opportunity, the market setup, right? We just respond to it. And we have to be humble to accept that 80-90% of the success comes because of those factors, and 10-20% is because of our effort or our being present at the right time in the right place, right? So that's once you accept this, then you know that last 3 years have been extraordinarily good for even an average investor. You did not need to be super smart to make money. Now we know again by market cycles, when you have such a spectacular return being made, obviously it will average out. Kamal, my learning is, if markets were to compound at 40-50%, like most portfolios would have done in last 3 years, then all the industrial people who are doing business, they are fools, right? They are struggling to make 18-20% ROE, and I buying their shares. If I can continue to compound money at 40-50%, then there is something wrong, right? So my expectation is real. I would say for a long-term investors, you need to be very watchful about, there is definitely, and I repeat again, there is definitely certain amount of euphoria in certain section of market, in certain stocks, and markets. It is being little bit of frenzy also, because now there are 12 crore retail investors, and there are so many institutions. There is huge momentum in the market, not only in India but worldwide. That's the new system which has happened. So be very careful, be very selective. But at the same time, if you ask me, am I nervous? Am I really selling off everything because markets have gone up so much? Am I not able to find opportunities to invest in this market? None of that is correct. So you just have to be very watchful, very careful. Maybe the amount of effort which you are putting in before buying any companies 3 years back, maybe you need to double that effort today. Maybe you need to do far more diligence in the companies in which you're buying, and have a realistic expectation and have a slightly larger time frame where things may not play out, very quickly.
Right, Madhubhai. So you had also mentioned that you are invested at all market I would say levels, because you have been able to find out right ideas. So in the current context, which is one big opportunity that you see still prevails and you are wanting to bet on it?
So, Kamal, before that, I would say that, one standard disclosure that this is only for educational purposes. We will definitely discuss stocks, and we'll discuss sectors, etc., etc. Just to give an example, but this is no invitation for anyone to come and buy these companies. You are expected to do your own homework before you really take any advice from you or me, right? The disclosure is for both of us. So with that, I just spoke, there are 2, 3 themes, Kamal, which I like from a real long term, for wherein I am looking for opportunities. This is like my 10, 20-year bet on India, on the globe. One of the biggest theme, according to me, is going to be carbon neutrality. And when I say carbon neutrality, I am not only meaning sustainability. Sustainability is one part of it. To my mind, there's going to be no choice. It is going to be compulsion for policymakers, for governments, for politicians, for bureaucrats, for business people, and people by and large. To my mind, it's a very, very big problem. If we don't do anything about it, in the next 20 years, temperature in majority of the large cities will rise to 58, 60 degrees centigrade. So it's a thing which is coming very slowly. So that's why maybe the entire comprehension is not being done. So I would say this is a very, very large theme. Billions and trillions of dollars of wealth globally will be made and also be destroyed. If you are in the wrong place, a lot of wealth will also get destroyed. People who are attached to carbon, people who are attached to this kind of thing, I would suggest a lot of wealth will also be destroyed. So this is one theme which I really love. Markets are again telling us that yes, it is working. Private companies, public companies. If you look at, for instance, just as an example, you look at JSW Energy. A stock was at 60 rupees. Today it is 420 rupees. Because they shifted from thermal to solar power to wind power. And the focus clearly is green hydrogen. The focus clearly, again, in my theory, as a strict disclosure, I bought some shares of JSW Energy at 60 rupees, because it qualified all my criteria. And I may have sold them, because I feel that I can find better opportunities. So this just to explain that the overall theme really seems to be working, and I will find a lot of ideas here. The second big theme, according to me, is cyber security. In times to come, the war will not be fought. Will be fought at border. The war will be fought in computers, in out here, like you and I are doing. It is already happening. We can already see one of the pharma companies in which I am invested had a cyber attack. The whole company came to a standstill, Kamal. They had to literally stop operations, and it took them maybe 150, 200 crore rupees to overcome that situation. And also they lost 3-4 months of time. And this is not like the largest pharma company. I'm being told AIMS Hospital had a 2 times cyber attack, and the whole hospital came to a standstill. So this is going to be a major issue in times to come. As we become more and more dependent on technology, as we become more and more dependent on computers, obviously there are that bad elements in the society who like to capitalize. We call them hackers, right? They would like to capitalize, and for them, it's a big opportunity. Third, Kamal, I would say, is artificial intelligence. I would say again, like what happened in internet in 2020, if people appreciated what kind of changes will artificial intelligence bring, what kind of changes will internet bring to the world by and large, I don't think you needed to do anything. There is more than $25 trillion of wealth which has got created on the back of only internet. Whether you talk of Google, you talk of Apple, you talk of Twitter, you talk of Amazon, it has all happened on the back of internet invention. I feel AI at this point of time, and we need to monitor it, could be equally big or even bigger. We don't know, right? So these are very early days. It's very early days to conclude how big this wave is going to be. But to my mind, it's going to be a very large wave. We need to monitor this very closely. And it is not that we need to buy companies which are doing artificial intelligence. We need to buy companies which are adopting artificial intelligence and by being more efficient in their own businesses and by being more efficient in by and large in the marketplace, right? Now, some of these companies will be in the private domain. So as you said, that for me now, whether it is private or listed, I look at opportunity as an opportunity. So we need to go dig deeper, but I am very certain that there will be a lot of companies in these three themes which will create real value. Coming back to secondary market, from the sector perspective, I think we continue to like by and large the China plus one theme, China plus one, and I'm going to the extent Europe plus one, because there is a lot of business which is also shifting to India from Europe, and there's a lot of business which is shifting from China as well. So, here we are able to see that this is also like a decade opportunity. With combination of PLI, you will find these companies in auto component, chemical, textile, which is going to be like a wave. I can clearly see with my interaction, reading between the line of what the managements are saying, this is really, really coming into India. You saw what happened in the entire EMS sector in the last 2 years. This is actually the China plus one only. And it also covers, of course, a lot of manufacturing, etc. And then we gave a call in infrastructure sector. That was maybe 2 years back. I'm still invested into a lot of these companies. I still feel that the quality of balance sheets is getting better. People are significantly underinvested still in this sector. There is no real research which is being written on a lot of these companies which have become relatively larger compared to where they were. And order book position is very good. Quality of balance sheet is improving. So I still feel that it is wise to be invested in some of these companies. Lastly, Kamal, I think to me, it is like a buffet out there. You have got an entry ticket to this buffet. Make sure that you don't overeat. Make sure that you don't eat to the extent that it becomes, you become indigestion, right? And make sure you only eat what you like.
Right. Well said.
It's a buffet out there.
Right. So I think rightly quoted in the introduction that you're an open-minded investor. You're not a fund manager. So absolutely, I am really, I again reiterate the same. That's the feeling which I get, and I have generally been moderating all fund manager interactions realistically from investors' perspective, and that's what my endeavor has been. So the subsequent question in this regards that comes to my mind is that today the real investor question that he wants to ask with regards to listed space is that I have already a portfolio of equities. I'm a long-term investor. Markets are kindly, fairly valued or little overvalued or, whatever it be. Should I be putting my money as lump sum or should I stagger it? Is there any science? Is there any, learning that you have had over last 3 decades in such markets? How should one approach such decision?
So Kamal, you know that I talk my heart out. I don't talk what is right or wrong. Whatever comes in my heart, in my mind, I talk. And I talk very freely. A lot of my friends tell me that how can you speak in people like this? But I just so for me, I don't know. I am sure there are few hundred people here, and there are thousands of people who will listen to this conversation. But I am talking very honestly. To me, this is not a market where you should just put all the money lump sum. Maybe you should stagger it because we are not, it's not a screaming opportunity as it was 3 years back. That वो भैया बोलते थे ना बीवी का बंगड़ी बेच के शेयर ले लेने का है, वैसा तो वो कोई अपॉर्चुनिटी नहीं दिख रहा है that you need to sell the bangdi and buy shares, right? But there are opportunities. You have to be open-minded, and it will be wise maybe to stagger it over a period of time, so you still have some dry powder left. If there is some external event which happens, or there is some internal event which happens, because that is not in our hand, right? COVID was not in our hand. Like so many, the Ukraine war of Russia was not in our hand. We don't know what event can come. But if there is an event like that which happens over the next 1-2 years, at that time you should have dry powder.
Subsequent thought that comes to my mind, everybody's talking about India. We have to understand your views. I read somewhere you mentioned that India lies in a geopolitical sweet spot. What do you mean by that, and how big is that opportunity?
So Kamal, India is actually really in a sweet spot. People like us who dreamt that what India will be 25 years back, 30 years back, 20 years back, and we stuck to our conviction, right? And we are, I must honestly say, we are reaping the benefit out of that conviction. And again, I repeat, majority of the conviction came because of my interaction with Rakesh Bhaiya. He was very open, very candid to give his view openly, right? And then, of course, we studied, we worked hard, etc. So, a lot of the success which investors have had is because of India has worked out. It is because their conviction in India has worked out. Let me give you an analogy. If you are a phenomenal football player, right, you need a wide, large football field to show what kind of football can you play. If you get Ronaldo in my room and tell him to play football, can he play? Can he show his skill? No, right? So my point is, only when the country has such phenomenal opportunity, it is people like us who can benefit. So people who have been convinced, they have been greatly rewarded. When I came in, the market cap of India was only $150 billion, and the GDP was $300 billion, right? Today, the market cap is $3.75 trillion, and the GDP is also close to $3.5 trillion, right? So what my point is that if you have had the conviction and if you have had the skill to really identify some great entrepreneurs, that opportunity has been there. Now, this has happened. What is likely? In my opinion, in the next 25 years, the opportunity will be far larger than what it has played out in the last 25 years and last 30 years. And why I say this is because, just give me a minute, Kamal, just give me 1 minute. Just give me 1 minute.
No problem.
Sorry. So I feel that, let's say roughly we have taken 5,000 years to come to $3.5 trillion of GDP. As most people are projecting, including the Davos presentation by Government of India, they have publicly presented that we could be targeting aspirationally to a $35 trillion GDP by 2047, right? Mukesh Ambani has publicly said that India could go up to $40 trillion GDP by 2050. And similar has been the view expressed by a lot of people, industrial people as well as investment bankers. and large investment organizations, right? So one thing is for sure, you and I don't know at this point of time whether we will be 20 trillion, 25 trillion, 30 trillion. We don't know, and we don't know the time frame. But the trajectory is clearly very strong. Trajectory is upward. Trajectory is strong. That is the view which I would like to take for myself. Like, I hope my health permits and I am able to see the next 25, 30 years. And I am still as excited, as passionate an investor I am, even in this whole time frame. So the opportunity is very, very large. Everything seems to be falling in place for India. We had a absolutely fabulous prime minister who has approached, problems in a very methodical manner, and a lot of the problems which we faced for centuries and decades have been addressed, and a lot of them have also got resolved. It is always work in progress. Like you see all around the kind of infrastructure development which is taking place in this country. You see the roads, whether you go from Delhi to Jaipur, you go from Bombay to Pune, you go to many roads, and I travel, I feel very proud as an Indian that this is not European roads, these are Indian roads in which you are traveling. So a lot of things are falling in place. India is getting the right attention right now. If you see what has happened, the first time in the history, maybe the Indian Prime Minister is a G20 leader. And you see how beautifully we have played it out. G20 is a small, I not even heard of G20, 2 years back. In as much depth as I learned, but we have really played it to our advantage. So there is a lot of foreign attention in India right now, and also because a lot of the people who are invested in these markets are not making money. They're not making returns, whether they are companies or investors. So Kamal bhai, पानी तो बहेगा वहीं जहां ढलान होएगा, right? So पैसा तो आएगा वहां जहां रिटर्न दिखेगा. So clearly we can see a lot of investor and industrial attention in India. One peculiar thing, Kamal, which I observed, that top 25 companies in America, they want to invest here. They want to invest big sums of money. But the top 25 investors of America are missing. You don't talk of a Charlie Munger or a Warren Buffett or Dale Raniel being present here. So a lot of the smart money has not yet come here. And I'm sure as the market matures, some of this money will have to come. There is no choice. So I'm really, really very, very optimistic on India. Obviously, we will go through our own cycles. So nothing goes in a straight line. And this will also not go from a straight line from 2023 to 2050. There will be cycles. We need to monitor. We need to monitor technological innovation which are happening. And we need to monitor, of course, a lot of this, like, artificial intelligence, which we talked about, how it is going to impact the job market, how it is going to impact the population by and large. But barring considering all of that also, I remain very, very optimistic. I'll watch carefully. See, GDP growing doesn't mean that you will make money. In China also, there were tremendous growth of GDP in the last 10 years. But the stock market has not done well. GDP growing only means that there is an external event which is happening. You need to be fully aligned with companies which have promised to make money. And which is what I've been saying, that we need to be really bottom up. We need to understand the sectors, the companies in which we are betting for us to make money. GDP growing, India growing will only help us.
Sure. So India presents a lot of opportunities, and you are able to find obviously all those opportunities with open mind, and hence the wealth creation continues. Another thing that comes to my mind is when as an investor one turns an ultra HNI, one has a portfolio of say 25, 50, 100 crore plus. In that category, investors always try to, even today I have seen even 5 crore plus investors start to think global. Be sitting in India, or even NRI sitting in Dubai, or UAE, or maybe NRI sitting in any other country, they invest in India, but they invest in India some portion. Ultimately, what they want is returns, and they ask this question from us also as advisors, that our ultimate objective is returns, but we feel that we should diversify outside of India also, because dollar has been Indian currency has been depreciating over last 20 years, and it is like in terms of global appreciation, if we kind of compare returns, it is not a good idea to invest everything in India. What has been your experience? You're also an ultra HNI, you are also an investor. I want to understand, how do you want to approach this question, global versus India, for your own personal investments over the next 10 years?
So, Kamal, I'll be again very honest. I don't have global expertise. And if the food at home is so tasty, why look outside? That's been my attitude. And so I am able to find enough opportunities for me in India. So my portfolio, by and large, is fully concentrated on India. Within this, we have, of course, diversified to go and invest into some private companies, some startup companies, some listed companies. Some amount of money is also parked in fixed income. Some amount of money is also in real estate. So in India, we might have diversified a little bit, but I am not looked at outside India. That is not to say that there are no opportunities outside India. I am saying I don't have the expertise. I may have a little bit on India to capitalize on those opportunities, and I am not willing to give my money to some third person, to manage as of now. Seeing that will work out in the global context. I would like to manage my own money, because I am very passionate about it, passionate about investing. So people who are, I would only say, people should look at with an open mind. And if you are underinvested in India, let's say if you have only 1-2% of your overall portfolio, and if you are an NRI, if you are a person from Indian origin, then of course you should look to penetrate, India. You should look to increase your allocation in India.
Sure.
Kamal, I am just saying, one person has commented, maybe we should respond.
Sure.
That what the conversation which we are having is at a 35,000 square foot. I thought we are having at a ground level. So maybe you can ask me some ground questions for people who are interested. I am open to discuss anything.
Sure. So there is always a debate between a concentrated portfolio and maybe a diversified portfolio. There have been a lot of well-known advisors who have made a lot of wealth for clients with a concentrated portfolio in the last 10 years. What is your approach, and what is the right approach as per you, say, from now onwards?
So, Kamal, I would say that it should not be concentrated in three companies, because anything can go right or wrong in those companies. At the same time, your portfolio should not be consisting of 200 companies because you wanted it to be diversified. So I am somewhere in between. I would like to say that, a good well-made portfolio of maybe 20, 25 companies in your equity portfolio should be a right mix, wherein larger companies where you have higher conviction, you can invest up to 6 to 10% in individual companies, 6 to 10% in individual companies, and companies where you have lesser conviction, you can start with maybe 1 or 2% in the overall portfolio. So that's how I look at it. People who are investing into mutual fund and PMS, I have some specific advice, because again, I have done mutual fund for a large period of my life. If you are doing mutual fund, do not buy 40 schemes or do not invest into 20 PMSs, because again, it will be averaged out. You are buying 20 schemes, they in turn are buying 30, 40 companies in each portfolio. So your portfolio is really, really very, very well, too much diversified. So you need to find couple of good managers, maybe I would say not more than 5 or 6 mutual fund schemes. You can have one or two large cap multi-cap schemes, maybe one mid cap, maybe one small cap, and maybe 1 or 2 sector specific theme which you like. And that should be the real portfolio. Because if you go too much diversified, then of course your returns will really get averaged out.
Sector specific theme, if you were to select between financial services, IT, and maybe manufacturing, what will you select, or maybe any fourth?
So my choice out of this will be manufacturing, and we spoke about China plus one and financial sector at this point of time.
Madhubhai, you had actually moved from listed space to unlisted space 10 years ago. I want to understand, this is a question, which I always have in my mind, that what was the opportunity that you found and what was the experience, and where do you stand today in terms of your personal portfolio, from where obviously, HNIs can get a cue that where are you bending towards for say next 10 years?
I would say a majority of my money is still there in listed portfolio, right? We are now open to investing in private companies. Our family is setting up. My nephew looks after it. This platform called Singularity, wherein we are managing third-party money also, right? And we are raising and we are investing our own family money into some of these funds to make sure that we are fully aligned. So, Kamal, it's not again about private company or public company. We are very open wherever we find opportunity, wherever we find valuations are comforting, wherever we find great entrepreneurs, we are aligned to invest. In the first 20 years, Kamal, I didn't even had so much money that I would have diversified it as much as I want to do today, right? So today it makes sense. And a lot of the sectors you don't have publicly listed companies. Let's say if I want to find something in artificial intelligence, it's very hard to find a publicly listed company. It's very hard to find a cyber security publicly listed company. And that's why we have to look into private domain to find some of these companies also.
Basic question which comes off and on today is, does it make sense to invest in a stock like HDFC Bank, which has not moved over last 2 years and has a stellar track record of earnings growth even in last 2 years as well as in last 20 years, or a PSU bank like SBI or any other PSU bank?
So by media that I have been a very convinced investor on PSU Bank as a theme. I've spoken very, very vocally, very, very passionately about investing in PSU banks. And touch wood, by the grace of God, it has worked out very well. We don't talk stock specific, but we can talk about HDFC Bank is a large bank, and we have already given necessary disclaimer. So it's coincidental. In fact, I made some investment in HDFC Bank only a few days back. Because again, this is a very open mind investing. We don't have to necessarily make money only in small companies or mid-sized companies. I think HDFC Bank, in a way, is really well poised for a person who is willing to take a 3-5 year view. It should work out. It should work out good. Again, please don't treat this as my recommendation. Do your own homework before implementing on this.
Absolutely. So, subsequent thought that comes to my mind is that today, MK Ventures is represented by Singularity as a platform, which is like for unlisted private company investments. So, what is that offering that you have for listed investments for any clients or investors who want to invest in listed space?
So, for a lot of people, maybe it is work in progress, Kamal. Maybe in future we will do something in the listed space. But I don't want to do a large platform. We will do very, very selective advisory to people who appreciate our work and with whom we'll enjoy working. The idea is not really to build a large platform in the listed space.
So while you have already shared your learnings and we have covered almost all the topics, I want to understand what is your vision of MK Ventures. There is this gentleman who has kind of mentioned that, do we see MK Ventures becoming Berkshire Hathaway of India? What are your views in this regards?
Kamal, at this point of time, it's a listed company. I don't want to talk about it, too much. We are still debating, evaluating what kind of opportunities are there. I bought majority stake in this company, and frankly, when the plans get formed up, we will come back and we will speak about it. But at this point of time, nothing more than this I would like to comment.
Sure, sure. So you are a very grounded, not at all flamboyant, one of the very simple and approachable investors. That's
Thank
why I
you
say
so much.
investors, not a fund manager.
Thank you so much.
And I also hear you saying India has reached 3.5 trillion of GDP in 5,000 years, which also makes me understand that you're spiritually inclined. And I know that that you and your themes that you identified are also kind of making me understand your spiritual bent of mind. I know you are kind of you are very well known fund manager for your contribution to philanthropy. So obviously we understand all that. So I want to understand your learnings from that aspect. In terms of your career, in terms of your discovery of investment ideas.
So it's a beautiful question, Kamal. Allow me 2-3 minutes to answer it. And again, I'll speak my heart out. See, as you progress in life, there are things which become and you continue to realize. So I got connected to Sadhguru and Isha Foundation somewhere in 2016. And, and I have had a lot of learnings as a human, as a person in the last 4-5 years. So one of the things which I realized, most important thing which got deeper into my head, it's not a secret, but life is really, really very fragile. You don't know what will happen to you next moment or next day, right? A lot of the things which we really take granted, and we believe that we have a lot of time to do that thing. Like, I will enjoy with my children at a later date. Let me first build my career. Let me make some money first, or I'll spend time with my parents at a later day where they are going, right? Or I'll meet a friend after some time. What I really realized in last few years that you can't you have to compartmentalize your life and leave every aspect. You can't postpone a lot of these things which give you happiness, right? So that is one of the key learnings I have had. That has not made me any less efficient investor or any less passionate investor. I am equally very, very passionate about markets, about investing, but maybe somewhat more balanced than what I used to be in my younger days, where the focus was only money and markets. And when you take your eye off a little bit from these things, even during the day, and your mind actually starts working in a much, much more sharper manner. So it's actually a good idea to get some amount of balance in life. The other thing which I would say, Kamal, everything has to come at a matter of time. This is my time where I feel I would like to make some difference. The reason why I agreed to do this call with you, because we don't need to publicize ourselves, right? Because we want to make a difference. We want to give back. Maybe this 1 hour of interaction may be useful for some people. It will give them some food for thought. So I would definitely like to make some difference in my whatever limited manner I can through my knowledge which I have accumulated, through a little bit of wisdom which I have accumulated in the market. But whether it is markets or life, I would like to do it. And one of the most passionate thing which I have apart from market is mentoring. So I really, really enjoy that, mentoring young people. Lots and lots of people are very close in touch with me. And I am very happy that I'm able to make a little bit of difference to their lives.
Madhubhai, I think we'll now move on to the last question. You also mentioned, and we know there are 12 crore new investors who have come to the stock market over the last 3 years, and who other than you can give them mentoring? As you mentioned, that's the area of your passion. So we have talked a lot across many years, and even in this webinar, how to make wealth. That's a very, very broad topic. So I'm not going to ask you that part. I wanted to ask you a question that how not to lose money in stock market, especially for these new investors who have come to the market over the last 3 years. What is your I would say 3-point or 4-point or 5-point guide on how not to lose money in stock market.
If you are investing yourself, there are two categories. If you are investing in a mutual fund, we have already discussed that. Choose 4-5 schemes, be selective, look at track record, etc., etc. We have already discussed that. If you are investing on your own, first, do not be greedy, be needy, right? Because if you are greedy, then you will always chase return, not the quality of returns. Second, before investing, think 20 times, because you may not get a chance after you have invested. Third, do not go by tips. They never come in time. And they will never come. You need them when you need them the most, right? Do not listen only to people and invest. Do your own homework. When you go and buy a 10,000 rupee shirt, do you buy it because someone else has told you? You buy it after seeing it, after evaluating, after understanding, okay, this is the right price which I'm paying for the shirt, right? So when you do so much effort for buying a 10,000 rupee shirt, right? Why invest lakhs of rupees just because someone has called you, or just because you saw it in TV, or just because you heard someone on a webinar? It is better that whatever your ecosystem is, you do your own homework, you learn these things over a period of time, right? And lastly, Kamal, I would say, I want to congratulate all the people who have joined the stock market in last 2 years. They've been very smart. Let me tell you, Indian investors have tremendous respect. They've been very, very smart. They went against the crowd. It was not a crowded trade when all of these investors came. Their first experience has been very good. I think majority of these people have made money in the markets. I would say focus on wealth creation, focus on long-term investing. If you want to be a trader, if you want to do derivatives, if you want to do future and option, be careful. It is a full-time job and it requires tremendous amount of expertise. There is not even 10 rupees lying in a table to be picked up. Don't think that making money is easy in the stock market. Certainly not in trading and derivatives. So if you are a normal person wanting to create wealth over a longer period of time, do not get tempted by short-term advice. Do not get tempted by short-term return. In the long run, it will really, really work out very, very well for you.
I will just add one point, and I will, maybe take your views on that as a sixth point, which I think, when an investor has done this entire list of 5 points and identified a 10,000 rupee shirt, and then after that there is a sale, and then 10,000 rupee shirt is available at say 8,000 rupee. Investor, rather than selling, should buy more, but generally it doesn't happen like that. So what is your 1 point of wisdom to those investors at that point of time?
So you have to buy it. Absolutely. If you are convinced, if you want to buy bread and if atta is getting cheaper, would you be happy or unhappy? Right? Because you want to buy a company, you bought it at X price. But if you think it has become really cheaper, then you should be very happy, because volatility is a real friend of a long-term investor. It is not a risk. As long as you are able to distinguish between risk and volatility, then volatility is your friend. And you should be very happy that what I bought has become cheaper. And if I have money, then I should buy more of it.
Absolutely. On this note, that volatility is our friend, and equity market throws a lot of opportunity at all levels. You only need to have right lens and long-term horizon with the right attitude, and obviously right fund manager to manage your money. And that is where we at PMSAF World are always looking for such grounded entrepreneurial fund managers for our clients, for our investors who really want to create wealth over long term. Thank you so much, Madhubhai, for your time. I have been wanting to do this webinar with you for almost last 3 years. It is my fortune that you gave me time to do this webinar. I hope you also liked participating in this webinar. We'll do more of such discussion as per your convenience and as per your inclination on our platform PMSAF World. Thank you so much for your time, and thank you everyone for logging.
Yeah, thank you so much. Really appreciate it. Thank you so much. Thank you.